So how do you overnight swing trade in the summer? That's a good question to consider because quite often volatility slows down during the summer. And for overnight swing trading, we're looking for the overnight gap, one big move to take advantage of overnight. With all that's going on, obviously I have no idea if we're going to have a high volatility or low volatility summer. But this is a good lesson in terms of how to approach most summers or just low volatility times in general. During low volatility times, we're often met with a positive gamma regime, meaning the market is slowly going up, but there are no major big moves day after day. The summer of 2025 is a great example of that. Not a lot of big moves, although there were some nice moves, and when it does hit negative gamma, you keep an eye out for those opportunities because those are the times that overnight swing traders really make their move. During low volatility summers, we generally don't hedge, at least not in the traditional SPY-T fashion. That's when we will use 2 and 3 to 1 options ratios. So for example, if the indicator says up, we might buy 3 calls to 1 put, or it'll be a ratio in terms of delta or even the amount of money you put in. During negative gamma or more volatile times, we'll certainly use hedges to protect ourselves. But during the summer, we'll just take smaller positions. Because the fact is, if there's not enough of a move, we could lose money even if our indicator is correct. This is also a time we'll start looking at other indicators in our toolbox that gives us a sense of the pressure. In other words, could there still be a big move the next day? And if the confidence is kind of neutral, we may just avoid trading overnight, especially during these low volatile summers. If you're not familiar with overnight swing trading, it's a high risk, high reward style of trading. It sits somewhere between day trading and longer term swing trading. But we trade overnight. We're trading what is referred to as the overnight gap. However, for it to work, there needs to be a gap. And when we're in the middle of the summer, quite often that gap is not as high or as strong as we would like it to be. Now, with volatility moving down, we don't need as much of a big move to actually make money as compared to volatile times. The good news is that premiums do adjust during the low volatility times, meaning there's not as much of a hurdle rate to get over to start making money, meaning the market doesn't have to move as far to make money as it might during those more volatile times. And that's why it's important to know what the hurdle rate is. Is it 0.1 or is it 0.3? That's a big difference in terms of how much the market has to move at the open to actually start making money the next day. That's an important number to understand. And yes, it is available in the member section of SPY Tomorrow. A solid observation of the numbers. If you see that high pressure, then maybe you'll want to increase your position size. If you see a more neutral, again, you may want to just opt out that night or put in a much smaller, maybe half or a quarter of the position size you normally place. It really is up to you and your risk tolerance. It's also helpful to keep a journal, whatever signal you use to determine whether you're going to point up or down. Using a journal during different types of markets will help give you a hint as to maybe how you might want to trade. If you can look back and say, okay, my indicator is acting like this or is showing this much pressure, and most of the time when it does that, it has this kind of a move, or maybe in some situations it's wrong or it's flat. These are trends that you should keep an eye on and pay attention to. And again, the best way to do that is with your own personal journal for review. So can you still make money in the summer overnight swing trading? Absolutely. You just have to be more cautious because you're probably going to be faced with more days in which the market did not move enough for you to make money. You could actually lose money with just a little market move, even if your indicator is correct. And too many days of that in a row can start to draw down your account in a way that just might make you feel uncomfortable. And if you're faced with that, if it just doesn't seem to be going your way, you may want to put a pause until you see a little more volatility. When trading, we often have that fear of missing out. This could be the big move that makes our account. But that's not really what we're looking for. We're looking for consistency, and overnight swing trading is like any other kind of trading. It really does depend on your management. And if things just don't seem right, don't trade just to trade. Skip it. Trust me, there will be more opportunities in the future. And sometimes if you skip a number of bad days, you ultimately end up winning because you didn't have as much of a drawdown. Even if you do miss a couple big moves, ultimately the average will be in your favor because you're making better decisions and trading with data with a track record rather than hoping that tomorrow just might be that big move that you've been praying for. Overnight swing trading still offers opportunities throughout the summer. You just might have to be a little more selective. And if you're new to overnight swing trading, summer can be a good time to practice. Now, I may not practice with, say, options because theta overnight decay certainly can hurt you during the summer if you're not careful. However, that doesn't mean you can't try other methods such as buying and shorting stock, or even using leveraged ETFs like the SQQQ if you want to short, or the TQQQ if you want to point up. These are 3 times leveraged ETFs that can give you a little bit of movement up or down, but it's not going to be affected by theta or big moves that would take out your account, especially if you position size well. We talk about SPY on this channel because our indicator is spytomorrow.com. It focuses on the ETF SPY, which mirrors the S&P 500. It's a little more stable, which means it's not as volatile. So maybe you'll want to consider an ETF or stock that kind of mirrors the S&P 500 that has, say, higher volatility, especially during lower volatility times. So you might want to consider the QQQ, which often mirrors SPY, but has more volatility. IWM doesn't mirror it as much, maybe an estimate 75% of the time it's in line. Maybe you want a stock, perhaps Apple or Tesla, something that generally follows the market. These are other options to consider when SPY volatility is extremely low. The market doesn't stay the same all the time. There are really different types of markets, such as high volatility or negative gamma markets, or positive gamma, low volatility markets. Different news cycles, such as earnings or even government reports, offer certain seasons and market conditions that you need to consider. Because during earnings season, sometimes premiums are inflated just before specific earnings, such as maybe a Google or a Tesla or whatever may be in the news during the time. And that's why it's important to be aware of what might happen after the bell and before the bell the next day. Being informed and not just guessing as it relates to overnight swing trading is your advantage, even in the summer. I'll see you in the next video.